Welcome to this presentation by Facilitators Research. This research is distributed exclusively for informational and educational purposes and does not constitute financial, legal, tax, or investment advice. For such services, you may reach out to speak to one of our officers.
Diversified financial services is the broadest sub-industry in the financial sector, encompassing everything that sits outside pure banking and pure insurance. It includes consumer finance, capital markets, financial exchanges and data, mortgage real estate investment trusts, asset management and custody banks, insurance brokers, and multi-sector holdings with significant financial activities. This presentation provides an overview of the diversified financial services ecosystem before drilling into each constituent sub-industry in dedicated companion videos. We focus on the multi-billion-dollar institutions that define each segment and the strategic dynamics that will determine their next decade of growth. The diversified financial services ecosystem commands more than $60 billion United States dollars in combined market capitalization across listed African companies, representing approximately 14% of the total financial sector market cap. It contains 7 distinct subsegments, each with its own competitive dynamics and return profile. Across these segments, more than 8 million small and medium enterprise customers are served, alongside tens of millions of retail customers. This presentation maps each subsegment in turn, providing a foundation for the dedicated companion videos that follow. The diversified financial services ecosystem contains 7 distinct subsegments. Consumer finance includes auto finance, microfinance, and buy now pay later providers. Capital markets covers investment banking, brokerage, and securities trading. Financial exchanges and data covers stock, derivatives, and commodities exchanges plus data and analytics providers. Mortgage REITs are real estate investment trusts focused on mortgage assets, still nascent in Africa but growing. Asset management and custody banks cover pooled investment vehicles, pension fund managers, and custodian banks. Insurance brokers are intermediaries placing risk with carriers. And multi-sector holdings are diversified holding companies with material financial services exposure. Each of these subsegments gets its own dedicated companion video later in this series. For cross-cutting trends are reshaping every corner of diversified financial services. First, digital intermediation. Every subsegment is being transformed by digital platforms that compress margins for traditional intermediaries but expand addressable markets. Second, regulatory convergence. Regulators are increasingly applying consistent principles across banking, insurance, asset management, and brokerage, creating both compliance burden and competitive clarity. Third, institutionalization. Pension reforms across Nigeria, Kenya, Ghana, and Egypt are channeling long-term domestic capital into asset management and capital markets. Fourth, cross-border integration. The African Continental Free Trade Area is creating demand for cross-border brokerage, custody, payments, and insurance services that diversified financial services firms are uniquely positioned to provide. Diversified financial services firms generally deliver mid-teens return on equity, with significant variance across subsegments. Asset managers and exchanges typically lead with 20% or higher returns, while multi-sector holdings and mortgage REITs deliver more modest single-digit to low double-digit returns. Revenue is more fee-based than banking, providing stability through interest rate cycles but sensitivity to capital market volumes. Key risks include capital market volatility reducing transaction volumes, regulatory tightening increasing compliance costs, fintech disruption compressing intermediation margins, currency volatility eroding dollar earnings, and reputational risk from any single subsegment's misstep. Diversification within the holding company can mitigate, but also obscure, these risks. Several firms in the diversified financial services sub-industry exceed $1 billion United States dollars in market capitalization. Within multi-sector holdings, Al Mada of Morocco, Société Nationale d'Investissement, and Etisalat Al Maghrib command multi-billion-dollar valuations anchored in banking, insurance, and telecoms. Within asset management, Sanlam Investment Management, Coronation Fund Managers, and Stanlib are the leading names. Within insurance brokerage, Alexander Forbes and Aon South Africa lead. Within financial exchanges, the Johannesburg Stock Exchange and the Egyptian Exchange are the largest listed entities. Within capital markets, RMB Corvest, African Capital Alliance, and Helios Investment Partners represent the private capital side, while SBG Securities and Renaissance Capital anchor the listed securities side. 5 drivers attract investors to diversified financial services. First, fee income stability. Fee-based revenue models provide earnings stability through interest rate cycles, attracting investors seeking defensive financial exposure. Second, secular capital market deepening. Pension reforms and retail investor adoption are deepening African capital markets, lifting transaction volumes across brokerage, asset management, and exchanges. Third, cross-sell potential. Firms that combine brokerage, asset management, and custody can cross-sell aggressively, lifting customer lifetime value. Fourth, merger and acquisition optionality. Many diversified financial services firms are acquisition targets for larger banks or insurers seeking to broaden product sets. Fifth, environmental, social, and governance investing. Asset managers and exchanges that build credible ESG product sets are attracting global institutional capital. Like the broader financial sector, diversified financial services activity is concentrated in 4 markets. South Africa dominates, hosting the Johannesburg Stock Exchange, the largest asset management industry on the continent, and the most developed insurance brokerage market. Nigeria follows with a rapidly growing asset management industry, an active but smaller capital market, and a developing mortgage REIT sector. Egypt hosts the Egyptian Exchange and a fast-growing asset management industry, serving the country's 100 million-plus population. Morocco anchors Francophone North and West Africa through Casablanca Finance City, which has become a hub for Pan-African asset management and private equity firms. Kenya rounds out the leaders as the East African capital markets hub. 5 strategic imperatives apply across every subsegment of diversified financial services. First, build digital distribution. Every subsegment must invest in digital client acquisition and servicing to defend against fintech disruption. Second, develop ESG product sets. Asset managers, exchanges, and brokers that build credible environmental, social, and governance products will attract global institutional capital. Third, pursue regional licensing. Cross-border licensing under the African Continental Free Trade Area will unlock new addressable markets. Fourth, strengthen risk management. Regulatory convergence means compliance burden will rise across every subsegment, requiring stronger risk frameworks. Fifth, cultivate talent. African financial services firms face a global talent war for quantitative analysts, technologists, and product managers, and must build competitive employee value propositions. In summary, diversified financial services will grow faster than the broader financial sector, driven by capital market deepening and digital adoption. Cross-border licensing under the African Continental Free Trade Area will unlock new addressable markets within 5 years. Environmental, social, and governance product sets will become a defining competitive differentiator. And fintech partnership and acquisition will reshape competitive positioning across every subsegment. The diversified financial services ecosystem will be a primary beneficiary of African economic maturation over the coming decade. Thank you for watching this overview of diversified financial services.